Alright, welcome back. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Before doing anything, stocks, equities, bonds, currencies, all extremely volatile, extremely dangerous. You could lose all your money fairly quickly. So let's do a quick market update. Today, I believe the NASDAQ hit all-time highs. It just never ends, does it? So Monday, let's cover this first. Monday, I thought there would be more upside to silver and possibly gold. And I went long on quite a few call options. That wasn't a good idea, turned out, because they slammed it. They slammed it hard. And they continue to slam it all week. Even though there's major shortages everywhere for silver right now. And probably prices are going up for gold as well. But on the physical market, it's looking like $40 an ounce, somewhere around there, which is significantly higher than right now. It's at $26.30 on the futures market. So if there's some big buyers, which if I was a big tech company or industrial supplier for anything, solar, EVs, you name it, even the medical field, I would look to possibly buy a large quantity, or they could buy on the futures market and then take delivery, right? Now, the retail investor is trying to cause that demand shock, right? Because, let's face it, they don't actually have that amount of the physical stuff. Matter of fact, in like one day, Monday, there was more shorts in currency-wise, quantity-wise, put on than the entire yearly supply that can be put out. So that's how you know it's manipulated. It's pretty obvious, right? And here's a nice little pie chart. One of the guys shared. It's from Gold Silver. I believe that's Mike Maloney. Jewelry is only 33%. And everything else, where they make spoons and forks, which is rare these days, it's only 33% for jewelry. And if you look at all jewelry, it's never sterling. It just has some of it in it to give it the shine, the color. It's like plated. And the resale value of that is like nothing. It's not worth the melting down process and whatnot. If you guys were thinking that, I know some of you were. Sterling, yeah, maybe once silver is like over $100. 56% is industrial, electronics, batteries, biocides, solar panels, and etc. Computers and everything else. 56%. And this is why I personally believe they keep the price down. It's not just a monetary effect of it, because if the price went up, then it would be competing with bonds, currencies, cryptos, everything. And it holds its value in the long run. Not like everything I just named off. Well, we don't know. We'll see what happens with the corn, the cryptos, right? Now, what does this tell you? Well, for one, they keep the price down so the Nasdaq and the FANG index could go higher because they need cheap silver. I mean, it's in wiring, it's in everything. It's in circuit boards, chips, blue chip stocks, right? All of them. Well, if the price of it starts going up and up and up, the cost of everything, electronics, the things that we take for granted because the prices have been dropping on them because of innovation, well, they're going to start going up. And then people are going to think, oh, inflation's here. And then all they have to do is look at metals, gold and silver, that are skyrocketing because if silver goes up, gold will go up with it, just for the demand shock reason. But then on top of it, it will be a monetary reason as well because all they do is print endless, fiat currencies. So it's a double whammy in the perfect storm for them to only appreciate. Now everyone's like, yeah, but they could print endless currency and manipulate it forever. No, they can't. They can't. Because of what I just said. They can't. I mean, they can mine more, but it costs more and more to mine and more commodities to mine because it costs a lot of energy and oil to mine. So they can't keep this game up forever. What I'm trying to say is the COMEX, the futures, and all that, all the rigging, it only holds for so long. It's a managed retreat. And that's why the prices do go up for metals over time. Since 2001, I mean, silver was like at $3 a coin, something like that. I'll look at it when I look at the charts. But it's still a managed retreat. They're still going up, and believe it or not, they've beaten the stock market over 2 decades. In the past 2 decades. It just doesn't seem like it because all you hear is about stocks going up and the candlesticks make it look like you're making tons of money, which technically you are, but metals are going to win in the long run. Now, again, if they can't meet physical delivery one day, it's going to happen, then the entire thing just blows up. And that's it. After that, it's limit up on futures. And limit up means it's every day it opens up and you can't buy any. You could, it just opens limit up and closes limit up. It could happen for days and weeks and months. And at that point, it's like you can't sell, you can't short. You could only just hold and watch the price of it go up. And it'll happen again. You just need something to break in the system, and something will break. Now, a lot of people were thinking, even I was thinking, did something just recently break because of the Redditors? No, I think, matter of fact, there's a part of me that, remember, I told you guys, I posted this in the newsroom, something feels fishy about it. You know what, if we later find out that there's a lot of big players, some hedge funds, some Wall Street guys who started the whole thing because it was thought out very well. They picked a company that really vibes with that generation on Reddit, millennials and Zoomers, GameStop. They picked GameStop because it was so heavily shorted. And then we already have evidence of certain firms taking, for one, they bought prior to the run-up. And then there was a lot of pension funds and retirement funds who probably want to get out. So the perfect way to make sure that all the millennials will buy and hold will be for a cause, right? And what better cause than to use their envy of the older generations and the fact that they have it so much harder, and they hate Wall Street, they hate capitalism at this point because it's been battered into their brains in public schooling, to stick it to the man. Because I remember when I was talking to that younger guy, he was so into it. He's like, I don't even care if I lose money. I just want to stick it to him. And they used all of that frustration to pump a stock and get out. And I posted everywhere. I'm like, listen, this is a pump and dump. 99% are going to lose money. And the 1% who started it, more than likely, or got in real early or got real lucky, they're the ones who are going to walk away, and everyone else is going to be holding the bags. Let me show you the chart of it now. Here's GME. Here's GameStop. It's at 53 bucks. Its all-time high was at 485. And I guarantee you there's a lot of noobs buying this thing all the way down. So I hope they learned a lesson. And this guy's gonna take a huge fall for it, probably. If they persecute him, go after him, that's gonna make millions of people even angrier and shows them how the system really works. Alright, what else did I want to talk about? Yeah, I posted the article, Meet the Hedge Fund That Made a Killing on the Reddit-Fueled Squeeze. And I guarantee you the regulators, they're not going to even, they're not going to go after them. They might pay lip service, they always do, but yeah. Bezos steps down from being CEO. I think he's gonna go into a new venture. They always do. I mean, when you're the richest guy in the world, it's either him or Elon. But I think it's one of them. He's probably gonna move into robotics. He really seems to love them. So it's creepy. Another thing, I just heard that Amazon vehicles are going to be retrofitted with cameras that are basically going to be spying on the neighborhood. And they moved their new headquarters, which looks like the Babylonian Tower, to DC. I'm sure you guys could put that together. By the way, what does that tower represent? It's like a middle finger to the creator. That's what it is. And what does it really represent? That we can be gods ourselves, right? By building things like that. Home prices keep going higher. That's inflation. Asset prices. Yeah, you see it in the grocery store, but it's not that evident. That's because it's mainly in the stock market and in home prices, so the boomers are still getting it. But just wait until they lose it. And they'll lose it to inflation. But by the way, the kid I was talking to, who was on the Reddit page, and he was a part of all that, got sucked into it and suckered into it. When I told him about silver and gold, he's like, no, that's what all the old people buy. And I'm like, okay, but does that make it wrong? Like, they just don't get it. And this generation, anyone probably, I don't know, you could say 35 and under, is pretty ignorant to metals. And they're going to lose everything. And the boomers are too, but they're going to be such a disenchanted generations, 2 generations, and the one coming up, I don't know what's before the Zoomers, but It's going to be a very angry generation, but they're going to learn a lot, and by the time they're in their 50s, I have a feeling it's when the pendulum's really going to just swing. I mean, it'll swing before then, but if you could make it, you'd see a lot of good change starting like probably 15 years from now. That's what I'm guessing. I'm hoping. Maybe not. Maybe they're incredibly stupid and they'll stay that way. So there's huge backwardation from a lot of those Redditors and kids did learn a lot about metals though, because they went out and they bought. They went out and bought silver for the first time. The backwardation is there's no supply. Alright, let's read a little bit of it. Wall Street bets raid on silver markets, which thankfully for many on both sides of the trade never got as out of hand as the heavily shorted stock malarkey, offers a few insights into just what happened below the surface as silver price round-tripped up and down by around 12% from Friday's close. That is insane, the round trip. Maybe some gold and silver bugs saw it as an opportunity to get out. At the same time, the institution slammed it, which gave you that perfect 12% drop. That's a huge move up and down. And they also did it to discourage everyone. So what happened? An initial Reddit post. I don't want to get too much into it, you know. Commodities Research Group, SecGen's Commodity Research Group, monitored the inflow into this target ETF and other major silver ETFs and funds and found counterintuitively that both saw outflows on 28th of January, the first day of the rally. Over the following 2 days, 29 and the 1st of February, historically high inflows into the iShares ETFs were met by similarly sized outflows from other silver ETFs and funds. So everyone did jump onto the bandwagon. As investors who followed Reddit's blueprint continued to stockpile ETF shares, other investors sold and probably took profits with silver having. Okay, I pretty much said that. On the price action side of things, the iShares Silver Trust physically backed and does not directly impact the silver future market. However, during the 3-day rally, the aggregated open interest on all silver futures contracts, regardless of maturity, jumped by 16,979 contracts, the fifth largest 3-day increase since 2010. 2010 was at the peak of silver. Most of the open interest increase was built on 28th of January. The 9,480 contract increase represents the second largest daily increase since 2010. I mean, it was a real battle, and, well, small fries just did not have enough to keep it going, to keep the momentum going. I was hoping globally everyone would FOMO, but that doesn't mean they still won't. All right, I'll talk about that. Given that silver ETFs saw outflows, all right, we pretty much know what happened. As discussed above, this very rare and has happened only 18 times since 2000. Only twice has the time spread exceeded 2 cents an ounce. This makes 1st of February 0.057 an ounce time spread an outlier and the second steepest backwardation observed on the front end of the silver forward curve since 2000. This exceptional situation may have happened as Swiss coin sellers were reportedly overwhelmed by online purchases of silver coins. To meet their delivery, they paid a premium to secure quick access to rebuild their silver inventories. Since then, the market has normalized, and as of 2nd February close, The silver 4-month time spread was back in negative territory. Yeah, on futures, but not the physical. Sachin concludes with some calming tones, noting that gold and silver have huge above-the-ground stocks in the form of bars, coins, jewelry, or silverware. Their large inventories are often used to store value and exposed to opportunistic sales when the price rises. This means, in Sachin's words, that a shortage of precious metals is very unlikely, and supply can instantly flow in if prices move high enough and incentives precious metals sales. Okay, that comes from the retail sellers. But the people who buy coins and metals, they don't go out and sell them unless they absolutely have to. They're going to hold. They're holding for above $100 an ounce. Everyone who invests in silver coins and gold. However, while Sachin does a great job explaining the mechanics of what happened, back in the real world of supply and demand, U.S. mint prices for silver coins remain at an extreme premium to paper prices. $48 an ounce. You know what? Let's take a look. Let's see what the prices are on eBay. You could buy it now. You could buy a Liberty coin for $42. There's a lot of garbage on here. Here's another one, 42. This one's going for $50. And they have 7 bids. Plus $5 shipping on one coin. Man, if you bought a monster box. Yeah. So it's around $40, $50. Alright. So what else in the news? Yeah, there's a lot of fishy stuff going around the Reddit debacle. You guys are going to be eating bugs. You know what allows all this craziness to happen? It's the society. And I'm not going to feel sorry for people who are going to be forced to eat bugs. I'm not. Because society, you know what? And I notice this personally. When I post on Twitter, when I post something that's sort of against the system, especially Wall Street, I get a lot of likes, a lot of shares. But when I talk about like self-responsibility, metals, this and that, it doesn't get a lot of likes. It looks like envy is what fuels society in America today. And that's going to lead to them eating bugs, as they should. Should never envy anyone. Now, I understand there is a class, right, that's screwing us. I understand it completely, but it's not capitalism, and you shouldn't envy. Trust me, they're in their own hell. You just don't know it. You have to understand, these people, it's never enough. They're never happy. And this life's short, when you sell out. Alright, let's see what Zero Hedge has to say. Alright, so Kashkari, Schiff, his last podcast was very good. This guy's probably going to be the next Fed chairman, which is insane. He's not even like a U.S., he's not a citizen. He's going to... Let that set in. That's right. Alright, everyone keeps talking about the surging dollar. It's not surging at all. Here, let me show you. Oh my god, surging dollar. Surging. Just surging. This is not surging. Now, this is surging. This is just maybe the beginning of a rebound to the 200-week moving average, which if the DXY does go up, does it mean it's going to slam metals? No. We've seen it go up. And I'll explain. Surging dollar could be the bull in the stock rally's China shop. No. Relax. I'll get to that in a second. Stock market is broken for all to see. Very true. More IPOs coming out, which are absolutely insane. Just another red flag. There's a bubble. Globalism first. By the way, I don't know how this guy plans to do all this green energy without more mining, because another solar firm, I forgot whose, went out, or they stopped. Oh, here. Panasonic is quitting the solar panel business. Do you want to know why? Because it's not cost effective. It's really not. Especially when silver goes up. It's like something like an ounce of silver goes into a 4x4 solar panel. Well, if silver goes minimum to $150, yeah, definitely not going to be cost effective. All right, let's talk about the markets. The VIX was slammed, so my call options on that, they were up last week. I should have taken profits, but who knew? Now, why is the market going up? Well, there was some good earnings for the tech companies, which that's expected for them. Of course, they won't highlight 90% of every other company who's not doing so hot. And now there's a lot of optimism around the COOF going away and traveling. Everyone's going to start traveling, which they will probably. COVID stimulus package, $2 trillion. And then there's another $1 trillion package. I wrote something about it. That's for the Green Deal stuff or whatever. And then they'll do infrastructure on top of that as well. Minimum $4 trillion in the next 6 months. And then probably more after that. That's more than 2020. But by the end of this year, it'll probably be close to what was printed in 2020, if not more. Which there's no way inflation's not going to be noticeable at the stores, at the pumps. Oil's going to go up, everything. Now, I've been talking about a stock market correction, which will give the dollar a boost, right? That's what I'm thinking. And that's what the reason the dollar has found a bottom now, intermediate bottom, is because of the interest rate. It's starting to pop. And I told you guys, this is the one thing to not ignore. And it's going higher. Now I'm telling you, if it gets to 1.45, stock market's going to sell off. And I think it's still going to happen. The only thing I may change on this is a major deep correction might not happen because I think they're going to stop it with QE and just more stimulus. But we'll still get a nice correction, possibly, um, on everything. Well, yeah, on everything. But it'll be very short lived. And once they put a bottom into that correction that's coming soon, if rates keep rising, so maybe like a month, 2 months at the most, where um, it's a significant pullback to the market. Metals, will they? This is where I'm starting to change my theory here. Will metals actually fall with the market? Not if they cap rates and then push the yield back down quickly and start announcing QE or a larger stimulus package, something like that, or UBI, or infrastructure spending, right? Right now, the market's going higher on euphoria over the end of the coof because of the vax, right? So yeah, that should give us a nice blow off top to the markets. It could go higher for maybe a week or 2 or 3 more. And it sucks because by now we should have had a serious correction, but the saying goes, the markets will stay irrational longer than you can stay liquid. And I'm starting to feel that now. It's okay. I'm going to put on more hedges for the market correction, but I don't think it's going to be as deep and steep as originally thought because I'm underestimating how much money they're willing to print and how they don't care. They really don't care. It's kind of like probably part of the plan. Hyperinflation is probably part of the plan at this point. I don't know. All right, so but the VIX is looking very good right now. It's only 21. Maybe you could go a little lower. What else? What else? What else? All right, here's the NASDAQ all-time highs. It's on a 4 count out of a 9 on the weekly. Technically, it could go 4 or 5 more weeks. So let's take a look at a monthly. Yeah, I mean, this month's candle is already above prior months, which was a 9 sell. Unless we get a correction this month, and if the body of the candle could go below last month's, then yeah, we'll get a nice correction. All indices, I mean, the heat map is super bright red. I see the FANG index extremely parabolic. So is the NASDAQ. And so is the S&P as you look at the moving averages. The S&P not as bad. The moving averages can still move much higher. In the end, I think in the next few years, we could see the stock market melt up or crack up boom with high running inflation, just like Venezuela. So people are going to think they're getting rich, at least the ones who have retirement funds and have money in the markets. But in the end, I mean, inflation is just going to keep accelerating. That entire time, metals are going to go up, by the way. So here's S&P 500. I'll move this up a little higher, which could take the correction to the 23.6 fib retracement, which would be perfectly lining up with the 200-week moving average. So if we get a correction, I think the 200-week moving average will hold it up. And that would also make it something less than a 20% correction. Because a bear market means something, 20, anything above 20% signifies a bear market, even though it did it back in March. But then again, when you come out with a 3 trillion QE, it'll stop it. And they'll do it again. So that's what I'm expecting. And then maybe all-time highs for the stock market going into 2022, 23. I don't know. It's inflation's what's going to end all the madness. And it'll creep up in 2021 towards the end and then really start taking off in 2022, I believe. Especially with infrastructure spending. Let me real quick show you guys. This is Google on the left. In the center is Amazon. Alphabet on the right. It's pretty ridiculous looking, isn't it? These are weekly charts. I don't think this one's probably done. I mean, this is blow off top, parabolic. Can Amazon, Apple go a little higher? Sure. Now the question is, I just said earlier, we get a correction, the markets go even higher. Just like Venezuela's. Can these do that? Yes. They can. So, but when you start adjusting it for inflation, your gains really aren't that high, especially when the cost of everything is going up. All right, here's E-mini light crude. It's a 56. Here's WTI. It's a 56 as well. I took profits on one of my oil ETFs Monday. I didn't even know I had it. I thought it was a silver stock probably, and I just didn't notice. And I had a pretty nice gain on that sucker because I bought it right at the bottom in spring of 2020 when we had negative oil prices. Probably should have held on a little longer. I think oil is, maybe a dip when the market corrects. Again, that hasn't changed, but I'm definitely going to buy that dip if we could get one. Because I think oil's going. Gas prices, people are going to start traveling this spring and summer like crazy. They're going to make up for a lost year, right? So gas prices are going to go up. So's oil. On top, and inflation is going to fuel that even more. And look, the price broke above my blue line. So a dip, a pullback to retest my blue line, and then it's like off to the races for oil for years to come. And that'll fuel the reason to do all EVs, even though it costs a ton of oil to mine all the minerals and to make EVs. And again, where does electricity come from? I don't know, because he's shutting down coal plants, but they provide a lot of that electricity. So electricity prices are going to go through the roof as well. I'm telling you guys, off-grid living looks better and better every day. Our self-sufficiency, right? Yeah, it's probably gonna take off. 80 bucks will probably be of resistance, and then after that, it'll just go to 100. Probably by year's end. Who knows? Now, interestingly enough, everyone thinks, oh, they slammed metals. It's never gonna come back up. This is it. It's gonna fall all the way back down to like 1,400 an ounce for gold, and silver back down to 20 bucks. Yeah, you wish. If oil and gas goes up, it pushes them. It's in tangent. There's a correlation between metals and oil. So now for the short term, with the market correction, is metals going to sell off? Probably a little bit. My curiosity here is gold and silver going to rally back up and make new highs before the correction? And I think it's a possibility. I can't even give a percentage of what I believe is the possibility of that. I just think maybe it's because of my positions I'm holding. I'm holding bags right now. But can we see a run up real quick? Next month or something. Yeah, I think it's possible. Because one, I have a green Ishimoku cloud. My other indicator, bright blue here, this is a giant bull flag. It all depends on when the market corrects or pulls back, has a significant pullback. And I'm just thinking, and it all depends on if they pass this next COVID relief. If they pass this COVID relief like soon, and it's actually like 2 trill, everyone's gonna get a lot of money, like $2,000 or something. I think, and that'll juice the markets a little higher. So I won't put on any more hedges for a little bit. I'll hold off on that, and then I'll go long some more on metals ETFs for the short term. And then this isn't easy right now. It's really not. It sucks that you have to depend on policy, right? But look at this Ishimoku cloud on the weekly on silver. It's just ramping up, and these ramps work very well. They give you high probabilities. Same with gold. It looks like it's ready to ramp up one more leg. So I think we could see one more leg up, maybe. And then maybe it'll be... And everything's going to seem awesome in the summer. And maybe because of that, metals will sell off again, and then we'll get a nice correction in the summer in the markets. It's really hard right now. Because it all depends on when they turn that burn machine on. So we have to pay attention to that. And I think they're going to turn it on because, for one, they need to suppress the yields, the 10-year yield here. So maybe maybe yields spike in the next few weeks. 3 weeks from now, something like that, we get a correction, a significant pullback in the markets. And then they come out with a massive amount of QE and COVID relief, this and that, infrastructure spending for summer, and then the market will rebound. And maybe for the next 3 weeks, we could see some sort of rebound on gold and silver. Maybe not a new high, but some sort of attempt to get back up there. Or maybe just the talks of the stimulus package will get metals to new all-time highs. And then market correction, the metals pull back, dip. That'll be your last dip buying opportunity. And then all towards the last end of spring and summer will just be a massive bull market rally for everything. But especially for metals. I'm just thinking out loud. I could be completely wrong, and that is all subject to change. Before you do anything, consult your licensed financial advisor. I'm just trying to game theory this because it's a critical moment. Another thing I really want to point out to you guys. Now, we did awesome, like amazing in the spring and summer of 2020 for mining stocks. They did amazing. They beat out everything. Just nobody talks about it because it's boring. Because, well, mainstream, we know why. Young generations don't talk about it because they don't even know. And then the gold bugs, they're old. And I'm just like, Gen X over here. Look, GDX. Right now, the last time the price of... Okay, so GDX is at what? $33. Okay. It's priced at $1,173 per ounce of gold. It's literally priced at $1,200 gold. The mining ETF. The junior GDXJ mining ETF, and there's better ETFs. That's for private members. We talk about them. Way better. But these are the big ones everyone knows about. The GDXJ, which is really mid-tier and large. You know what that's priced at? It's priced at like $900 an ounce gold. And probably like, I don't know, $10 silver or something. The mining ETFs are the biggest bargain in history. And yeah, they had a nice run up in the summer, and they've pulled back significantly from their all-time highs in the summer. Let's take a look at that. How much did they pull back? GDX pulled back about 22%. Hold on. GDXJ pulled back about 19%. So, these are not even priced in for the current price of gold. The last time, right now, gold is at what? It's at $1,800. Okay, the last time it was at 1,800, which was like the previous high almost, went to 1,900. GDX was around $60. GDXJ was around like, oh, it's not showing me. Is it the same price? They were the same price. That was also around $60. Right now it's 22. That's how undervalued they are. Because nobody is paying attention. Everyone's caught up in the bubble and the mania of everything else. And yeah, I do think cryptos took some wind away from the metals sales. And the younger generations are just not caring at all. They will. They'll be forced to care. Eventually, everyone will be forced. You will be forced. Because if you don't have metals, have fun staying poor. As the saying goes, as the crypto people say. So just understand that the opportunity is still there. It's enormous. It's the biggest opportunity ever. Alright, talking about that, let's look at Bitcoin and ETH. Well, Bitcoin had a rebound. I think it was fueled by ETH. Visa was talking about incorporating Bitcoin, which makes no sense. what they'll do is you could load a Visa card, like a prepaid card, which I don't think in the long run is good for the corn, because that means people will use it and then spend corn. Every time they spend corn on their Visa card, they'll go and sell it in the market instantly, and they'll drive the price down. So yeah, you don't. That doesn't. I don't think that's good for it in the long term. I posted this in the private group, even in the newsroom for free. I was like, listen, the fact that ETH hit I have to change the names a little bit because I don't want to, the algos. Um, when it was starting to rally above 1450, I'm like, hey, listen, guys. Actually, back down here when Bitcoin was taken off, I told everyone to buy this, to buy ETH because it's going to catch up. It's significantly lagging Bitcoin. It's going to catch up with the gains, and ETH outperformed Bitcoin significantly now. But Bitcoin went up 100% from its previous all-time high. So I think people were thinking the same thing with ETH. And when I saw it was starting to rally above 1400, I'm like, listen, that's what people think, so it's going to make new all-time highs. I don't know how high it's going to run before it loses momentum, but it's really running. So I honestly don't know. It's on an 8 count on the weekly for Ethereum. Maybe it could sell off next week, or maybe it just won't. It'll just keep going higher and higher. It'll probably go a little higher from here, but I don't know. It all depends when it loses momentum. So maybe another sell off for Bitcoin, and then they jump an ETH to drive it higher, and then that's indicative of I don't know, guys. I don't want to say too much because at least I know I don't know. Now I did call the all-time high for this bull market for Bitcoin literally like 3 days within. Is it? For my call, I hope so, but I think it is still. But can it go higher? Can this bull market be over with? Not necessarily, because remember, if they come out with a 2 trillion COVID stimmy, right? That's 2 extra grand in people's pockets. Some of that's going to make it into crypto. Then probably another round of QE, and then infrastructure spending, and then maybe UBI. Maybe they'll start it off like $500 or something. I don't know. Maybe they'll pay people to take the injection. I wouldn't put it past them. If not enough people, if half the population are like, no thanks. Especially me, right? I'm young. I already got it, so I'm immune. There's no reason for me to put anything in my body. I'm gonna leave it there. Yeah, that's pretty much it. Go to my website, join the private group. What else? Join all the links below my video. I changed the newsroom. There's a new one. The new links below the video. That's about it. Until next time.